Everyone has heard President Trump's signature phrase,
drain the swamp in Washington, D.C.
His instinct is spot on. The problem is that in Washington, it's not just about a few corrupt individuals. It's a whole crooked system. It's the federal agencies, it's the lobbyists, it's the think tanks and research organizations, it's the university and the academic groups and the media. And it's the corporations that have captured these agencies and turned them into sock puppets for the industries they're supposed to regulate. Well, I've spent 40 years suing almost all of these agencies and many of the industries. And I know the names in many of these agencies of the bad actors who need to be moved out. I understand the perverse incentives that put agency capture on steroids. I know how the system is supposed to work to protect the public interest and how it actually works to protect the mercantile interests of the regulated industries that have captured it. And I know how to fix it. When you sue an agency, you get a PhD in corporate capture and how to unravel it. And that's exactly what I'm going to do with Donald Trump's backing. Let me tell you what we're going to do. We're going to appoint honest officials who don't have conflicts of interest. We're going to listen to whistleblowers and act on their revelations. We're going to slam shut the revolving door that sends industry executives and lobbyists in and out of government. We're going to fire anyone who betrays the public trust or lies to the public. And we're going to prohibit federal agencies from using their powers to harass political opponents. That's what it means to drain the swamp. One of my priorities in Washington will be to make sure that President Trump can follow through on his promise and return us to a government of the people and to make America healthy again.
Good morning, everybody. You're watching on your TVs in Texas and Louisiana, as well as joining around the world on YouTube and Instagram and X and all the rest. It is a great morning here. I tell you what, that Kennedy guy, it's amazing. My father told me that actually what happened to his voice was from one of the jabs. I didn't know that, and I don't know that to be true. Someone could comment if it is or not, but well, he is a star. We have a star-studded bunch, that is for sure. Elon has come out so strong against, for Trump. It's really amazing to watch. He must win. Elon has repeatedly said he must win. He must win. If he doesn't win, basically all is lost. And, there's a few things that happen as a society falls into tyranny, right? Of course, you have to have, the free speech has to go. You have to quell dissent. You have to take away the freedom to fight back. You have to take away the elections, okay? Which I don't know. I mean, we have the magic electronic voting machines and the mail-in ballots. This is like the norm across the U.S. right now, which I think is just absolutely crazy. The Republicans did nothing. They did nothing about it at all. And then you see them here, playing games with this, adding the SAVE Act to the bill. And I guess they're just going to, well, obviously not, I guess, what they're doing is just straight up hoping that most of the American public and most of their voters are not hip to what's going on. And they're not looking at Thomas Massey, and they're not listening to Marjorie Taylor Greene, and they don't know that it's all a farce. The SAVE Act has already passed the House. There is no reason to include the SAVE Act in the funding bill, except to trick the voters into thinking that they're trying. If they wanted to use the SAVE Act as leverage to get the funding bill through, then they would say, we'll pass the funding bill, but the Senate has to approve the SAVE Act and the president has to sign it. That's how you do it. But instead, they're kicking forward this baloney deal. It will never pass, even if it passes. Well, here's the deal. Even if it passes the House in the form that it's in, it won't. The Senate will take it out. And Biden won't sign it with that act in it. So it's just lip service to their voters to try to get them to believe that they're doing something. And it's on full display. And you have guys like the guy from Utah there, I forget his name. I think it's Utah or Wisconsin. And you have a couple other ones that are kind of playing along with it, and they really shouldn't. They should just do what Thomas Massey did and what Marjorie Taylor Greene did and say, this is baloney. I'm not going to back it, because that's what it is. And there is zero chance, the only chance that they have of getting that SAVE Act passed. Now, I haven't supported the SAVE Act anyway, because I'm not a believer in passing new legislation when we won't enforce the laws that we have. We have all the laws on the books that we need. All we have to do is enforce them. All these guys in Washington know how to do, and I know because I'm here. All these guys in Washington know how to do is pass more legislation and give more jobs that we have to pay for. But apparently they have no idea how to enforce anything that's already there. We have all the laws that we need. We don't need another layer of bureaucracy in order to get things done. But that's all they know how to do. Write new laws that cost more money. We borrow more money from these guys, the Fed, the central banking cartel, which cost us more money and adds to the national debt. I mentioned the eggs the other day. The eggs are double even what they were before. So the eggs doubled, and now they doubled again. So eggs are up 200%. At least eggs are up 200% over the last year. 200%. It's crazy. We eat a lot of eggs around here. I mean, it's not like a big purchase, but it's like crazy. It's crazy. And that everybody just kind of, all right, well, whatever, I guess. I mean, it's just totally crazy. So we have the FOMC meeting today. The Fed is going to decide to cut rates or not. Or, well, it sounds like they've already decided that they're going to cut rates. That's the standard. That's what they're going to do. It's whether they're going to do 25 basis points or 50 basis points. Markets have been up, down, and all around since then. I've done a few shorts on the market, which have worked out pretty well. And everything's just kind of treading water. And as we move into this interest rate cut, may have a buy the rumor, sell the news type event, which is very common for these types of things. But in the end, whatever it does, general consensus is the market goes up, because there's going to be more dollars out there. If with interest rates going down, there's more dollars out there. They're going to continue to print money, of course. We talked about that as well. The amount of dollars that are being minted is still very, very high. So we're getting diluted. And now, of course, with the interest rates, I don't want the interest rates high anyway, but that's going to put more money out there. That's going to make inflation go up even more. So I guess eggs will even go up more. I really couldn't believe it. I saw the eggs. So I buy eggs usually like 60 at a time. I usually get them at Costco. Costco didn't even have the 60 eggs this time. So I had to throw in the towel and get them at Walmart. But Walmart 60 eggs was like $18.88 or something like that. That was like $8.88, $9.88, like 3 months ago. It's crazy. It's crazy. Craziness. Pure pandemonium. So I did touch on the magic voting machines. Assassination attempts. Of course, we had Trump. Trump met with the sheriffs who, I guess, got this guy. Absolutely crazy that we have so many. Already 2 assassination attempts on President Trump. Here is him meeting with. I mean, what a class! He is a class act. Meeting with the sheriffs, Mar-a-Lago.
That's good-looking human beings, huh? Mr. President, great job. Great job. Moving down the line. Thank you very much. I'm still here.
Still here, he says.
Thank you very much.
So he's meeting with the Trump just announced the prime minister is traveling to the United States to meet him next week. The world is starting to recognize Trump. This is what George says, this guy, George.
These leaders are fantastic. You have to understand, he happens to be coming to meet me next week. And Modi, he's fantastic. I mean, fantastic man. A lot of these leaders are fantastic. You have to understand one thing. They're 100%. These people are the sharpest people. They're not a little bit backward. They are at the top. You know the expression, they're at the top of their game, and they use it against us. But India is very tough. Brazil is very tough. There are certain countries, I can tell you everyone, I can give you from top to bottom. China is the toughest of all, but we were taking care of China with the tariffs. So we're going to do a reciprocal trade. If anybody charges us 10 cents, if they charge us $2, if they charge us 100%, 250, we charge them the same thing. And you know what's going to happen? Everything's going to disappear, and we're going to end up having free trade again. And if it doesn't disappear, we're going to take in a lot of money. Okay?
Modi has been extremely successful and popular. I mean, he's kind of like Trump in the way that, like, I guess a lot of people don't like him and a lot of people like him, but overall, extremely popular prime minister of India. He's been prime minister for a long time. So Modi is coming over to see Trump. Fairly interesting. It's going to be, I tell you what, guys, we've done nothing about the magic electronic voting machines, and we've done nothing about the mail-in ballots. I think that if Trump gets in, they want him in. That's what I've actually said all year. I remember being at Bitcoin Ben's event almost a year ago and telling everybody that I think that they've decided he's going to get in. Now, that being said, with the assassination attempts and everything else, the assassination attempts, both times these guys are, plugged in. You got the one guy in the BlackRock video. I guess they were both BlackRock videos. I'm not sure if they were both BlackRock videos. One of them was an Azov video for the Ukraine. BlackRock, though, owns, I think, over 50% of Ukraine. I mean, something crazy like that. And, Azov is obviously Ukraine. So, I mean, these guys, and he was recruiting guys to go and fight in the war. I mean, these were tied in guys. So you have to think that, well, how many of those guys are there out there? How many are there out there? And so you have like the calls to take them out. It's just really, it's mind blowing. You wonder how it ends, how it stops. And then we have all of these people that are here. And like, to me, I hope that if Trump gets in, that he goes ahead and does the things that he needs to do in order to deport the people that came illegally. But those people have legal status now. And so if he continues to go within the legal framework, like he always has, thinking that he's like confined by this legal framework that people say he's in, then I don't think that he'll be able to put together any deportation force, because they'll just challenge him and tell him it's illegal and all that stuff. Remember, I talked about it yesterday. Abraham Lincoln suspended habeas corpus, the bedrock of our Constitution. He suspended it. I don't think he should have, but that type of person, that type of action is what will need to happen in order to save the country at this point. I mean, 20 million people came in over the last 4 years, and that doesn't include all the years before. I mean, it's a lot of people, guys. We completely changed. Obama said, I'm gonna change the nation. He did. It wasn't just him, though. Everyone likes to make him the boogeyman. It wasn't just him. There's a lot of different things. But anyway, pray for the country. Voting has started in Pennsylvania, and I think it is early voting is going to start now in a number of places. Get out and vote. Make sure that you vote. Let's talk about the markets. Matt Dixon. Sir Matt, how are you?
Hey, good morning, Bruce. Morning, everybody. Good to be here.
Yes,
So,
sir.
yeah,
Good to have
interesting day. So, I'll jump into the chart straight away. I mean, it has been interesting because it's gone exactly according to the Elliott wave expectation. And we've, I've been out there on X talking about it.
Yep.
As you mentioned, been going short this morning.
Yeah.
Since last night. So the reason being, let me just get in a bit. Hopefully you can see my chart there.
Yes.
Right, I'm going to actually jump into the old favorite Solana to start with.
Okay.
So reason I'm looking at Solana is we had a very nice clear 5 waves, and I've labeled them out there. That wave 4 should be over here just to show where it is. So basically got wave 1, 2, 3, 4, 5. Perfect rules there that wave 4 here doesn't overlap into wave 1. Wave 3 was the extended wave, more than 1.618 times wave 1. And then we got a nice little ABC wave 4, and then wave 5 down. It's actually a really, really nice 5-wave count there. So from 5 waves down, you expect 3 waves up. We did get 3 waves up, and it was really nice 3 waves. And I won't go into it now. On the shorter time frames, the C wave of the B wave. So this B wave is broken itself down into ABC, and the C wave exactly equaled the A wave. So I knew exactly where to sell on this market precisely. So I started going short, and I went out on X saying to people, my bias is going to be short, and I called it scalping heaven. Basically, these times when you're waiting for a big news event like the FOMC meeting tonight, for me, we'd had 5 waves down, we'd had 3 waves up, so the bias was definitely to the downside. Now, I know the market isn't likely to go any big move against me with this interest rate decision hanging in the balance. Everybody expecting the rate cut. I'm sure we're going to get a rate cut. I mean, just flip over now to FedWatch, the FedWatch tool. We can see here 65% chance of a 50 basis point cut and a 35% chance of a 25 basis point cut. And we can see how that's changed. A month ago, it was actually only 25% chance of a 50 basis point cut and 75% chance of a 25. It's flipped around completely. And I was expecting for a long time it's only going to be 25 basis points. It will be interesting tonight if they do surprise us and come out with 25 basis points. That will put the cat amongst the pigeons in the markets. Don't know quite what would happen there. I think longer term, there's no doubt about it. And I'll just jump into my X feeds. So looking at.
So you're calling a 50%, a 50 basis point cut.
It's likely to be. Everyone's expecting a 50 basis point cut, but you never know. It could still be 25, but it's going to mean there's going to be a lot of volatility because, clearly we are expecting 50 basis points. If there is 50 basis points, then we'll look forward to that commentary because I actually don't really know why we're going for 50 rather than 25. The unemployment figures are not that bad. They're not really bad. There's been a slight tick up in unemployment, unless the Fed is seeing things that we're not seeing. Hopefully that will come out in the press conference. But if we're seeing easier money, I mean, this one was a lovely chart I mentioned yesterday. We couldn't obviously see it, but it just shows the global money supply against Bitcoin price. And we can see that the Bitcoin in red basically follows the money supply. And we've just seen money supply, in other words, the amount of money coming into the system, that money supply has increased. And normally Bitcoin tracks it precisely or virtually precisely. So we would expect as M2 money supply is increasing, we expect Bitcoin price to increase. But no doubt short term, as we mentioned yesterday, markets can stay irrational longer than you can stay solvent. The rational thing here would be for Bitcoin to rise with money supply, but the markets can stay irrational longer than you can stay solvent. No doubt it will try to stress people out. So everybody thinking, most people thinking, okay, we're going to get interest rate cuts. You would think that'd be good for risk assets. So a lot of people were long in this market. I was consistently telling people time to go short because we had 5 waves down. That tells us, that's our clue. It's our signal that 5 waves down is impulsive. We then get 3 waves back and we're going to get a further 5 waves down. We've already surpassed the end of that 5-wave move. So we're already, technically speaking, we've potentially done the move if needs be. So right now, I've closed my positions again. So all those short scalping positions I had, and I had multiple, I've actually closed them all now for profit because the market went down beautifully in alignment with this expectation. After 5 down, 3 up, we expected a further 5 down. It'll probably go lower. I mean, we'll probably spike lower with the FOMC. It's going to be massive volatility. But all I'm saying is now we've surpassed this wave 5 here, that technically speaking, as far as I'm concerned, technically it could be done. I don't think it is. I think there's more downside to come, but I'm happy. Take my profits, keep the powder dry, wait for what's going to happen next. So that's the important thing, is just to understand where the market is, where the safety points are, where the risk reward is, and make your decisions accordingly. So we've had a fantastic time with Solana, with all of these moves. Downside here, upside here, and downside again. 3 trades just swinging with the market based purely on these signals and indicators. And we also had some beautiful divergent signals on different time frames as well. I mean, I'll just jump into the daily and just look at potentially where we might just see a simple divergent signal. Let's see. I mean, the last one we had obviously was here, signaling the downturn, the big downturn, and that was a great opportunity to sell short. So if I put this in its correct place, just move it down. It's down here somewhere. Very clearly, we've got higher highs on RSI, we've got lower highs on price. That's telling us of hidden bearish divergence, as we got indicated there. That was telling us price was coming down. Precisely what happened. And then on different time frames, we also got some further divergences telling us when the bottom was here. I'm just trying to see. Yeah, I can even see it now. So it's really good just to learn these divergences. That's why it's worth spending a few moments to go over them and put them in. So we've got this one here. We've got lower lows on the price, and then I'll just put the corresponding RSI. So absolutely corresponding on the lows here. We've got basically, so you can see higher lows on RSI, lower lows on price. That tells us of regular bullish divergence. So not only did you know to go short exactly on this point here, so I'll just put sorry, wrong one. I'm just going to put a circle around that to show you precisely where you wanted to go short was exactly in the middle of that circle there. We had the indicators to tell us. And then where do you close your trade? Well, here's the precise point to close it. And we got the exact divergence there. So the opposite divergence is hidden bearish, and then we got regular bullish. So we know when to open the short, when to close the short. And again, on different time frames, we even got divergences here to know when to close. If you went long here, when to close that. And I've been using these signals. And again, looking at that internal wave count, using the wave count to identify exactly where the market's going. And that's what I'm saying. You don't have to be a genius, and it's not, the market's never 100%. Obviously, I accept I can be wrong. And when everyone thinks they're 100% right, and this is what's going to happen in the market, then very rarely does that happen. So you have to still use your risk reward, never put all your eggs in one basket, do diversify, but there's been great opportunities. So with this scalping, for example, I've actually used low leverage and relatively small positions. The reason being, when you're in a low liquidity market, if you start to use large position sizes with big leverage, those market makers can see you. And in a thin market, low liquidity, they can spike the price against you aggressively, viciously, and wipe you out. So
it's obvious. It's actually, and it's something that as well I've been noticing and experiencing as well over the last 24 hours. When you do the big, they want that liquidity. So if you do smaller, you kind of come in a bit under the radar, it seems.
Yeah, exactly, under the radar. So they don't really see you. And yes, you have to fight the greed, because it was pretty clear the market was going down here. So obviously greed dictates that you want to put bigger positions with leverage, etc. But don't be tempted. You can collect a lot of small positions, because this was actually volatile as well on the way down. So you could keep shorting, take your profit, then wait for it to spike up again. So sell the highs, basically. That's what I was doing. And have multiple trades on the go, which is what I did. And that's just been a great way to do it. So right now, as I say, I'm out of the market. We're only, and we can see here on the Fed tool, we're 7 hours, 25 minutes and 25 seconds away from the Fed rate decision. So we're getting close now. So let's just have a little look around the market. We'll look at Bitcoin. Bitcoin did get above that psychological 60,000 level yesterday.
You called it. It knew it. They knew they had to do it. They took it up past. I watched it. It was so clear. I was like, okay, yeah, we're definitely going above. We're going above 60. We're going to be above 60 at 12 noon Eastern Standard Time, and then they pushed it above 61.
Yeah, we did, and then we've dipped that back down again. I think that I'm bullish, even if we get an aggressive spike down. That's entirely possible, depending on what they do with interest rates. I mean, they're expecting 50 basis points. If we actually get 25, then maybe there'll be a big disappointment in the market, and maybe we get an initial sell-off. But I think if they do 25, then the Fed will convey to us, they'll communicate that they're going to do more 25 basis point cuts at the next meetings. So maybe initially, if they do 25 and not 50, the market will not take it nicely, and we'll probably get another little sell-off in Bitcoin, etc. But then if they then indicate later they're going to do more cuts, then that will probably bullish the market. And as we said, M2 money supply is going up, interest rates are going down. There's going to be more money sloshing around the market. So there's more money to go into these risk assets. So I do think we've got a bullish scenario on our hands here. I'd have to check that wave count there. Now, I know we had 5 waves up. We could have a 535 potentially. So I still think there's potential for more downside. So I'm just being cautious now. Wouldn't quite know exactly what to do right now. Interestingly, oil has come down a little bit, and that's despite all the Middle East. I don't know if you talked about that earlier in the show, but it's been a lot of turmoil.
I didn't. Even though I watched the Middle East and I have my feelings on the Middle East, I hate talking about it because everyone gets so emotional about it. I've gotten to the point where I hate talking about it. But yeah, that was a mess yesterday.
Yeah, I think obviously I think people like us to give an opinion over what's going on. So I suppose there's going to be different sides of the equation, but all in all, it's a messy situation, and we got a bit of it came to boil again last couple of days. I thought oil price would be, it might affect oil price, but it's not. Oil price is coming down again, and that's probably a reflection of the economy now beginning to weaken. There's going to be less demand for oil. I guess supply isn't challenged, so I expect probably lower oil price. We did get
that'll be nice, and I do think that they're going to keep the oil prices as low as possible through election time.
Yeah, I mean, we showed a chart the other day about the correlation between oil price and CPI, and they've tracked each other precisely. So as oil price comes down, CPI comes down, or vice versa, whichever it is, whichever leads, we don't know. I think oil is actually leading personally. I think it's the reason for the spike in CPI was down to oil prices due to the geopolitical issues of the time. At the time it was Russia, Ukraine, spiked oil massively. And I think that's what drove inflation higher. So it's externally driven. And now we're seeing a bit of a slight calming of tensions, and we're seeing oil prices coming down now. So oil price CPI is coming down. That will mean they'll be able to do lower interest rates. That should be good for risk assets. So a lot of people are, calling for doomsday and that kind of thing in the markets. I really don't think we're there yet. I think we've got more highs to come, new all-time highs to come in a lot of the risk assets, including gold for one of them, although gold is a hedge against risk and trouble. But definitely also SPX. We've still got new highs to come there, I think.
Look at that, huh? S&P 500. That is really just impressive chart.
Absolutely, yeah. And again, we've got all those divergences, which were perfect signals of when to buy, when to sell, etc. So again, we can look into the current signals, but S&P looks as though it's got higher to go to new all-time highs. Gold, we were just looking at there. Yes, that's looking. We had nice little. You can see that corrective consolidation there near the top. lots of choppiness overlapping there. So it looks like a minor correction, and then I think that we're going to push higher again. Once again, brand new all-time highs coming for gold there, I believe. So DXY has been interesting. We've started to push down on dollar index, so dollar weakening, and that's probably ahead of this lowering of interest rates. We will get lower dollar at some point in the near future.
Yeah,
we're going to break this long-held support, I think. So I've got it labeled there as support zone, that red dotted line. We haven't actually closed below it on a daily closing. If I go onto the daily, you'll see that we haven't actually closed below it. We spiked below it, but we haven't closed below it. And don't forget that previous low was back in December last year. So it's almost a year now. We've not managed to break the low, but that's going to break fairly soon. That should give us a bit of impetus for the risk markets, for Bitcoin and so on. So looking forward to upside in not too distant future. But as I say, I wouldn't dare position just yet, because I think we're going to get something aggressive and volatile just to upset a lot of people. Toncoin was one that we've looked at quite a bit. Again, we had beautiful signals there. I don't know which time frame I was looking at. We had also lots of divergent signals telling us exactly when to buy, when to sell, etc. We had a perfect sell signal here right at the top, bearish divergence, which was the sell signal, and we can see Toncoin has come down. I think, and I'll go on to the 4 hour probably just to maybe clarify a little bit. Again, you can see very clearly on the 4 hour, all of these divergences were beautiful, telling us exactly when to buy, sell, etc. But I think that's probably just an A wave down. I think we've probably just got a little B wave up, and I think that we may have a little bit more down to go.
Yeah.
If this is the beginning of an impulse higher, we have 5 waves. So it's either an A wave or a wave 1. We then have wave 2 or a B wave. We then have wave 3 or a C wave higher. So either way, in the not too distant future, we are looking at higher on Toncoin. So even if we do correct lower, maybe with this FOMC meeting, volatility, even if we correct lower, following that 5 waves up, we're going to get another 5 waves taking us beyond this level here. Risk reward isn't amazing right now. I would like to see it lower before I jumped into a trade. So I'm not right now. As I say, I'm going to wait for the FOMC. And normally, this 5 waves, if it's a wave 1, for example, which is the most bullish scenario, then the retracement down would normally come to about 50% minimum, normally 50 to 61.8% of this move up. So you're talking,
right around $5 or something, right?
Somewhere around the $5 mark, yeah. So I do expect potentially we might spike down a bit more. That would be typical if we got a sort of 50 to 61.8 retracement, and then moving up.
Doesn't mean it's going to happen, but that is typical. I agree. I ran a couple of good shorts on Ton as well, but yeah, I don't know. It has a lot of supporters and a lot of people in it, so it's hard to say exactly what it's going to do. But
yeah, I mean, the fact that we did get that clear 5 waves higher, and all the extensions were perfect, and you can see even here that we measured wave 1, transposed to wave 2. Wave 3 was exactly 2.618 times wave 1. When you see that sort of accuracy, pinpoint accuracy on the Elliott wave and Fibonacci extensions, and then you saw a nice sort of 5 wave move here, ending diagonal, I think, here for wave 5, then it was very, very clear, especially with the divergence we had in play. So we can see again here, higher highs on price, lower highs on corresponding RSI. Also, we were still oversold on RSI. So amazing signals there, powerful signals to sell. So I can see why you're selling Toncoin from there. As I say, I think I'd be taking profits, but I wouldn't be going long just yet. I'd wait to see more of what the FOMC is going to be doing.
Yep.
Litecoin, again, we've seen a lot of, a bit of volatility, I suppose, on Litecoin. Looking here on the 4 hour.
It has been performing better than almost all the other assets.
Yeah, it's been reasonably stable. We can see the choppy sideways movement here. There's been nothing impulsive. So with this choppy sideways movement, even if it were to dip lower, if it does, then I still expect us to move substantially higher after that. So Litecoin has got plenty of good prospects there. BNB is actually relatively similar. Yeah, they're all reasonably similar.
Relatively similar. You're right. Yep.
Yeah, they got different kind of wave counts. Again, we got where was this one? This was actually, I don't know where that hidden bullish was. It wasn't here for sure. It wasn't this one. This is actually a regular bearish divergence here that we had. So I'll just remove that because I'm not quite sure where it corresponds to. But I'm sure there's divergences in play. Right, yeah, let's just see. Yeah, hard to see right now. I can't see any particular divergences, but we had a clear ABC down anyway. And I think even if we're choppy around here, we're going to get some upward movement. But the thing is, you've got to bear in mind, everybody is expecting with the Fed cutting rates, it's going to be positive for the market. So I think you've got to expect there's going to be a negative reaction to start with, because the market will move to catch as many people out as it possibly can. So keep that in mind.
The market makers are going to try to take whatever money that they can. It's important that everybody understands that you're trading against hundreds of people that are working. They're maybe not supposed to be working for, or they're loosely working for the exchanges, and they are trying to.
Yeah, it's actually quite interesting. Yeah, it's quite interesting just to see how the expectations for the interest rate cut have moved. This is just 18th of September. So this was Wednesday. Sorry, when was this? Wednesday. Sorry. Oh, target rate for the 18th of September. Sorry. So it's a few days ago, a couple of days ago. They're expecting, I think this was actually yesterday I did this. I can't see the date on it. But anyway, I think it was yesterday I did it. So the expectation yesterday or the day before at worst was 59% chance of a 50 basis point cut and 41% chance of 25. And it's moved a lot just in the last day or so. As I say, we're now to 65% and 35. So the chances are it's been moving more and more and more towards a 50 basis point cut. But if we do only get 25, that, as I say, it's going to put the cat amongst the pigeons. There's going to be some real volatility in the markets. So we'll have to see. Crypto right now across the board is red, but again, that fitted precisely with our expectations with the Elliott wave counts. And as I said, there's still a couple of possibilities, but at some point, just looking longer term, I'll just scroll out a little bit, see, we can see the big movement up. This is the impulsive direction, is upside still. This choppy sideways movement, even if it has lower to go, which it possibly does, at the moment, yeah, there's a couple of possibilities, but it's corrective, in my view, no matter what, this is corrective movement. So it means that at some point we're going to get a new move to the upside, taking us above the local high of $209 for Solana. And possibly, if we get a really nice October that Bruce was talking about, and maybe that October starts shortly after this meeting. I know it's still September or September.
It usually starts early. It usually starts early. Yeah.
Yeah. Christmas starts early. Yeah. So I think we're going to get a really nice run. So this downward movement is very typical. It's going to scare a lot of people, a lot of weak hands out of the market. People are worried about a lot of things, geopolitical issues, the Trump assassination attempts, the interest rates, all sorts of things people are worried about. And so the people are selling, and the more people sell, the more people want to sell. And so you're getting all these weak hands out of the market, but you can be sure, and we've read about it, Michael Saylor and others have actually been accumulating more and more Bitcoin during these times of really cheap Bitcoin. What it's going to likely be in the future. I mean, Bitcoin is almost definitely, again, there's never 100%, but almost definitely going to break its previous all-time high of 73.7. We're now 59.8. So we're talking percentage terms, a lot higher to go. So all the big players are actually accumulating Bitcoin right now. Yep. Most of the retail players are actually closing their positions, selling out and not being positioned long in the market. So I just want to contrast what Bruce and I have been talking about this morning about going short the market. This was purely very short-term positioning.
Yes.
Just what's called scalping in the market, which basically sometimes a scalp for me can last a matter of seconds.
Yeah.
Or maybe just minutes, but it's a very, very short-term trade. When I'm very confident that the market for example, now it's got a downward bias. So as I say, I've been selling the spikes, selling the peaks, and closing them very shortly, very shortly after for profit. And if I had an upward bias in the market, I'd be doing the opposite. I'd be actually buying the troughs and selling the peaks. But again, scalping is short term. It's not about long term positioning. Long term, I'm bullish this market. So long term, I'm looking to accumulate every time we see a decent dip in the market. I can even hold a long term bullish position and at the same time be scalping short term.
Oh, yeah.
And that's actually an amazing way to reduce risk, because you're actually, every time you scalp short, you're getting zero, you're putting your risk to zero effectively, assuming the position sizes are the same.
And lowering your entry point, theoretically.
Yeah, absolutely, yeah. So these are great strategies that you need to understand about the timeframes that you're trading, and you can use them both together to balance and minimize risk. So there's lots of great little techniques that we can share with you, and we like to share with you whenever we can, because it's a fun market, lots of profit to be made, one of the most volatile asset classes, and some great assets there, and a great potential for the future, as Bruce is always talking about, the potential for the likes of Bitcoin with limited supply, when you compare it with fiat with infinite supply. And don't forget, if we get into financial difficulty, I'm talking about the government, the world, central banks, if they get into difficulty with recession, they are going to be printing money again. If they print money again, it's just devaluing your dollars yet again. But at some point, these, when you head into other assets, stores of value, obviously gold is one of the main stores of value when you have times of inflation, money printing, that kind of thing. And that's why we've seen such a massive rally in gold. We're at all-time highs there or thereabouts, because of all this money printing, devaluing the paper money that we use every day. And so gold's been a great store of value. Bitcoin's been on a journey, of course. We started off as a purely speculative asset back in 2009, and it's been evolving day by day, week by week, month by month, year by year. It's evolving to become a store of value, digital gold. And that's why the big players have been storing up more and more of this digital gold, Bitcoin, for when the price does rocket in the future, which in my view is without doubt. But never take anyone's view 100%. Make your own choices.
Well, anything can happen, guys. And if they are, God forbid, successful in one of these assassination attempts too, I think that we'll see a complete fallout of, briefly at least, of the markets. So anything can happen. Yeah.
So again, just to summarize, the market's currently down, but today is the big day. So whatever you do, please be very, very, very careful about positioning ahead of the FOMC meeting results, even after, because very often the market will spike in the opposite direction to where the trend is going to go shortly after. And it does this, again, the market makers are doing this to catch people out, to get you wrong-footed, the wrong side of the market. So if in doubt, don't trade at all, because the first rule in trading is don't lose money. Preserve what you have, and then you can start to think about something else. But when there's such risk as there is on a volatile day like today, it's not a bad thing to stay out of the market completely, unless you're a seasoned professional and you've got your risk reward absolutely spot on.
Yep. Amazing.
So that's it. I think we've got an amazing day to look forward to. Just to finalize, we are 7 hours, 7 minutes away now. So we're getting closer and closer to this Fed rate decision. But it's not just the decision itself. So as I say, very often when you get a decision, you'll get a spike in the market. So if it's 25 basis points, you might get the market spiking down possibly, because it's less than what people expect. The market is clearly expecting 50 basis points now. If we get 25, the market may have a big disappointment and sell off sharply. That would be the spike lower. But then in the press conference, the Fed could well come out and say, this is the first of a series now. We're now on a rate cutting cycle. This is the beginning of a rate cutting cycle, and there'll be more to come. If they're to say that, the market will take a big sigh of relief and then would recover very, very rapidly and start to push towards those highs that we've been talking about. So that's my kind of thinking of what's likely to happen. I actually think against the market, and I'm putting my neck on the line here, doesn't really matter whether I'm right or wrong, but I'm guessing it's going to be 25, not 50. And if it is, it'll give us what I'm expecting. I think that we'll get a spike down in the markets, followed by a nice dovish commentary and nice press release that will then push the markets up again. So that's my expectation.
Yeah, I mean, it would. I mean, that's their style. Right. That is their style. They come out, they do one thing, and then they come out and they qualify it, and you get the movements here and there. And of course, guys, the central bank is in the business of market making. Yeah, that's one of their mandates is market making. So there you go.
Yeah, and they've got to obviously they've got a dual mandate to maintain stable employment, but also to maintain steady inflation. Inflation's still way above target, of course. It's still 25% above target, isn't it? It's 2.5 when it should be 2. So they've still got high inflation. So
I mean, at least, those numbers are always jacked up anyway. I mean, I don't know if you heard on the beginning of the show, eggs have now gone up at least 200% over the year. I mean, it's crazy.
Absolutely crazy. Yeah. So inflation's still sky high, whatever measure you take. Even if you take their maybe dumb down.
It's over there.
It's way over. So I'm just questioning, how can it do 50 basis points when inflation is 25% above its target rate? Yeah. 25%. So it's 2.5 right now. It should be 2. That's a quarter. That's 25%. So it's so far above target. I don't know how they could justify saying we need 50 basis points when, yes, unemployment isn't that bad. So why would they do 50? Why is the market expecting 50? I don't know. We'll see.
I don't know either. I think there's some rumors of some meeting with JP Morgan and this and I don't know. But that's
maybe BlackRock that runs the world have told them what they need to do.
Yeah, BlackRock runs the world, man. It's crazy.
Yeah. Anyway, hope that's helpful. It's going to be a really exciting day today on the market. So thank you for listening, and look forward to catching up tomorrow with basically a summary of everything that's happened and what we should be doing for the future.
Awesome. Thank you, Matt.
Thank you, Bruce. Thanks, everybody at Impact Money. Catch you soon. Bye for now.
Always a pleasure. So there you have it, folks. It is pretty interesting. People are expecting 50 basis points since they lied about the 800,000 jobs. So it shows the data is behind and bad. Well, you might have a point there, my friend. Do you want 50 basis point cut? They lie about everything. I mean, what numbers have they put out that they haven't, the job numbers and everything else? What numbers have they not put out that they haven't adjusted? It's like every time they put some numbers out every quarter, I feel like then they go back, or every month we're adjusting those. Just kidding. I mean, these people are highly paid professionals. Do you think that they actually made that mistake? No. I don't. Bluff City breaks. I think it's the scam. Oh, they're trying almost everything for sure. They keep deleting data and replacing data. I know. They're like Hillary. They just wipe the hard drive, right? Like with a cloth. It's crazy. It's crazy, man. It's out of control. They never have to answer for anything. And that was what really, it killed me about the first Trump presidency. I had to kind of just sign off. I watched an old video last night. I almost published it because it kind of went along with what they're doing right now, talking about like what Mike Johnson is doing right now with faking it. He's just total fake job. He's just saying we're attaching this SAVE Act to the CR because we got to get it passed and we got to save, we got to stop this, and we got to make sure the election is safe. And he knows he's lying to everybody. And he got called out about the lie from Thomas Massie, and he got called out about the lie from Marjorie Taylor Greene. And he decided that I guess enough people are in on the snow job, that enough people aren't in on the snow job, that he's just going to do it anyway. I guess it's politically better move to fake out the people who can fake out. Enough people don't watch Marjorie Taylor Greene, or enough people don't listen to Thomas Massie. I have Thomas Massie right here because he deserves He deserves to be right here. We got to end the Fed. End the Fed. I was thinking about that yesterday too. My crusade to end the Fed. It is spot on. It's true. These guys are crooks. Mike Johnson is a crook. Sends our money off. Gives us a bunch of baloney. I turned into Alex Jones every day. So I'm hearing this 24/7. Well, that's awesome, man. Alex Jones is the man. So it's funny. I was not a YouTuber. I don't know if I'm in the generation in between. So my father, a boomer, who loves to watch YouTube. My younger brothers, who are millennials, love to watch YouTube. Me, man, I have a hard time watching YouTube. I don't know what it is. I'm glad that we have a partnership with a big YouTube channel, because I just never was my thing. I loved X. So I didn't watch that much Alex Jones was my point, but he's spot on. And I understand he has to dance. You got to dance around sometimes, because if you tell people, and he has in the past told people really the down and dirty, but if you do that these days, you deplatform. You got to be careful. You have to be careful what you talk about. I mean, it is just it. If you get deplatformed, what good does that do anybody? Doesn't do anybody any good if you can't talk to anybody. So there you go. I'm going to play this clip. This is Thomas Massey. He explained this. Let me just share this tab instead. The great Thomas Massey. A few months ago. Okay, that's that. Okay. Let me Grok's take on the CR and the SAVE Act. That's pretty interesting, I guess. Let's see what Grok thinks, he says. Thomas Massey's prediction is that Republicans may cave and pass. Thank God for X. Now or else we'd be completely out. It's so true, man. I cannot believe that we let it happen to ourselves. It's crazy. This is Thomas Massey. Thomas Massey's prediction that Republicans might cave and pass a continuing resolution, the CR, that's the funding bill, without including the SAVE Act, seems to be rooted in his observations of past political behavior and his current dynamics within the Congress. His analysis, based on the information available up to September 17, 2024. Historical precedents. Massey has pointed out a reoccurring pattern where significant policy attachments to spending bills are often removed or altered on the final passage. This pattern supports his skepticism. And let me just break that down, how that works, okay? So Congress passes the bill. They give it to the Senate. The Senate, they do this and that and run around and blah, 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 and this and that, yada, yada. And then they say, okay, here it is. We pass it with these amendments, and they send it down to Congress basically at the last minute. Maybe they're going out of town or whatever it is. And they say, pass it or don't pass it. And that's the way it works. And then Congress, of course, is sitting there. Now all of the weight is on their shoulders, and they can either pass it or don't pass it. So either the government shuts down or it doesn't. The Senate has passed it. They've passed it. All they did was change this, that, or the other. The president will sign it, and then, of course, they cave. And they do it. And so Thomas Massey knows that's what's going to happen. He's absolutely correct. I've explained it a number of times too. So let me just make sure okay. That's historical precedents. I'm going to read the rest of what Grok says. This is on Thomas Massey's feed here. Current political climate. The information from various sources includes posts on X and news articles suggest a division within the Republican Party and opposition from Democrats regarding the CR with the SAVE Act attached. This division could indeed lead to a scenario where the SAVE Act is dropped to ensure the passage of the CR, avoiding a government shutdown. The Speaker's strategy. So this is number 3. Speaker Johnson's approach, as described, involves attaching the SAVE Act to the CR, which could be seen as a strategic play to unify the Republicans temporarily. However, Massey's skepticism about Johnson's commitment to keep the SAVE Act in the final bill reflects a common tactic where controversial elements are used as bargaining chips and later removed or modified. The public and internal party pressure. This is number 4. Sorry. The public and internal party pressure. Reactions on this platform, like X, and statements from Massey and others indicate significant internal Republican pressure, not to cave on the spending issues, but the reality of needing a majority vote, potentially including Democrat vote, might force a compromise where the SAVE Act is sacrificed for broader support. Like, of course, guys, like that's the plan. Okay, and these guys, they don't care so much. They don't care about what you want, that they went ahead and they got rid of the gay dude from New York, whatever he was, the Puerto Rican Jew or whatever he said he was. Who knows what he was? I guess he was a big time liar. But they got rid of him, who voted however they wanted. He voted however they wanted. He would have voted for the SAVE Act. And remember, the SAVE Act is already passed. That's one thing Grok's not saying here. Maybe I'll play that, but I'm running out of time. But he would have, and they thought it was so important to get rid of him because he did whatever. And they're all crooks. They all have girlfriends and do whatever, guys. Come on. This is Washington, D.C. Okay. Not judging anybody. I am far from perfect. But they got rid of him and then they lost the seat. And now they have an even narrower thing in Congress. So 5, predictive accuracy. While Massey's prediction is based on patterns in his understanding of political maneuvers, it's worth noting the political outcomes can be unpredictable. However, given his track record of critiquing these processes and the current political landscape, his prediction carries weight due to its basis in observable political behaviors. Conclusion. Thomas Massey's prediction that the Republicans might end up passing a continuing resolution, CR, without the SAVE Act seems plausible based on historical patterns of legislative bargaining, the current division within and between parties, and the strategic use of policy attachments like the SAVE Act. While not a certainty, the scenario he envisions aligns well with how similar situations have unfolded in the past. The political necessity to avoid a government shutdown often trumps hardline stances on policy attachments, suggesting Massey's skepticism might indeed be well-founded. However, until the actual vote, all predictions remain speculative. Now, the other part about this that is very important, okay, and I've said this a number of times, and I'll say it again, the SAVE Act is all baloney anyway. We don't need more laws in order to... We just need to enforce the laws that we have. We don't need more laws and more jobs that people are going to, more bureaucracy. There's no one with balls in the rooms. All of them just gave in. Oh, it's absolutely. It's crazy. No balls. No balls. And they work for, everybody needs to realize that Congress, they all work for the central bank. And the reason why I say they all work for the central bank is because the central bank pays them. And I go, no. We pay them. We pay them with our taxes. They work for us. No, they don't. The way that the Federal Reserve has this set up, the way the central bank has this whole deal set up, and Woodrow Wilson helped them do it, and they built them a bridge over here, DC. The Federal Reserve, the central banking cartel, fronts the money to Congress. They give whatever Congress money that they need. They don't even have it, but they give it to them. Here you go. And then they tax you. They take it from you. And that's the mechanism they have. And then these guys, not this guy specifically, but Congress doesn't have to tax anybody. They go to the Fed. So the Fed pays Congress's salary. They pay Joe Biden's salary. They pay the salary of all the police. They pay everybody. The Federal Reserve does. And you know as well as I do that when someone pays you, if you have a job, whoever is paying you is the boss. So you're not the boss. And actually, your federal income tax is basically just the burn. That's what gets kind of taken back. That is not used as operating capital. All that's used is operating capital, and that's not how the system works. The system works is that Congress says, hey, we need this money, and the Federal Reserve says, mint this money, and boom, that's it. And that's it. So all of them work for the central bank. And then you have all the tie-ins there. Anyway, I would go into it quite a bit. I'm not going to go into it anymore right now. It's been a great show. You guys are all wonderful. And I look forward to, I'll be back on your TV sets there in Texas and Louisiana in about 5 hours. We will be watching closely the Fed interest rate cuts. Be careful out there, okay? When this stuff happens, it usually goes boom, boom. Maybe again, boom, boom. All right, that's the way it works. All right, cheers, guys.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.